What if I told you that the single biggest expense in your entire life is something you have almost total control over? And no, I'm not talking about your housing or your daily coffee habit. I'm talking about taxes. For most of us, taxes feel like an unavoidable penalty, a huge chunk of our hard-earned money that vanishes from our paycheck before we ever get to touch it. We see it as a necessary evil, the price we pay to live in a civilized society. But what if that entire frame of mind is wrong? What if the tax code isn't a weapon used against you, but a roadmap laid out for you? A series of clues left by the government that actually tells you exactly how to build wealth and, in the process, pay little to nothing in taxes. This is the radical, mind-shifting premise of Tom Wheelwright's book, Tax-Free Wealth. Wheelwright isn't just any accountant. He's the personal tax advisor to Robert Kiyosaki, the author of the mega bestseller Rich Dad, Poor Dad. And his core message is simple yet profound. The government does not want your money, it wants your help. Think about it. What does the government want? It wants a strong economy. That means it needs people to create jobs, provide affordable housing, develop new energy sources, and produce food. The government could try to do all of this itself, but that's massively inefficient. So instead, it creates a powerful incentive program to get you, the citizen, to do it for them. That incentive program is the tax code. Every deduction, every credit, every so-called loophole you hear about is a reward. It's the government saying, hey, if you invest your money in this apartment building to provide housing for people, we'll reward you by letting you pay less in taxes. Or if you start a business and create jobs for 5 people, we'll reward you with tax breaks. The rich have understood this for generations. They don't see tax law as a burden, they see it as a blueprint for wealth creation. Wheelwright argues that there are essentially 2 tax systems in the country. The first is for employees. As an employee, you earn your income, the government immediately takes its cut in taxes, and you get to live on whatever is left over. Your ability to reduce your tax bill is incredibly limited, maybe a retirement account contribution or a few small deductions. The second system is for business owners and investors. For them, the equation is flipped entirely. They earn income, then they spend money on everything they need to run their business or manage their investments, and only then do they pay tax on whatever little profit is left at the end. Their car, their meals, their travel, their phone, a portion of their home. If it's a legitimate business expense, it reduces their taxable income before the government gets a penny. Now, let's make this real. Imagine an employee. Let's call her Sarah. Sarah earns $100,000 a year. After federal, state, and Social Security taxes, she might take home $65,000. If she wants to buy a new $2,000 laptop, she has to use her after-tax money. She had to earn almost $3,000 just to have the $2,000 left over to buy that laptop. Now consider a small business owner, David. David also nets $100,000 in revenue. He needs a new $2,000 laptop for his business. He buys it. That $2,000 is a business expense. It comes directly out of his revenue before taxes are calculated. So his taxable income is now $98,000. The laptop effectively cost him 30 to 40% less than it cost Sarah because he paid for it with pre-tax dollars. Now multiply that simple principle across dozens or even hundreds of expenses every single year. You can start to see how the wealth gap widens. But the most powerful example in the book, the one that truly unlocks the idea of tax-free wealth, is real estate investing. This is where the concepts get really exciting. Let's say you save up and buy a rental property. It generates positive cash flow, meaning that after you pay the mortgage, insurance, property taxes, and set aside money for repairs, you have a few $100s of pure profit in your pocket each month. Let's say that adds up to $10,000 of extra income for the year. Under the employee mindset, you'd expect to pay tax on that $10,000. But the government desperately wants people to provide safe, clean housing, so they give real estate investors a gift, a magical on-paper-only deduction called depreciation. The IRS says that even if your property is going up in value in the real world, you get to pretend it's wearing out and losing value on your tax return. For a residential building, they let you depreciate its value over 27.5 years. So let's go back to your rental property. Say the building itself is valued at $275,000.
Divide that by 27.5 years, and you get a $10,000 depreciation deduction each year. Remember that $10,000 in cash profit you made? Well, you now have a $10,000 paper loss from depreciation to offset it. Your cash profit is $10,000, and you owe the government nothing. That is tax-free cash flow. And savvy investors use advanced strategies like cost segregation studies that Wheelwright details to accelerate this depreciation and create huge paper losses that can even offset the income from their day jobs. Now, you might be thinking, this sounds great, but I'm not a real estate mogul or a business tycoon. Wheelwright's point is that you don't have to be. It's all about structure. It's not what you do, it's how you do it. Do you have a side hustle? Do you drive for a ride-sharing service? Do you do freelance writing or sell crafts online? If you're just reporting that as miscellaneous income, you're paying the highest possible tax on it. But what if you form a simple entity, like an LLC, for that side hustle? Suddenly, a whole new world of deductions opens up. The portion of your car you use for that business, your cell phone bill, your home internet, a dedicated home office space, the software you use, the meals you have with potential clients. All of these things are now legitimate business expenses that reduce your taxable income. You're moving from the employee tax system to the business owner tax system, even if it's just for a small part of your income. You are starting to play the game by the same rules as the wealthy. The final crucial piece of the puzzle is this: you cannot do this alone. Your goal shouldn't be to become a tax expert. Your goal is to change your mindset and build the right team. Wheelwright draws a sharp distinction between a tax preparer and a tax advisor. A tax preparer is a historian. You give them a shoebox of receipts in March, they tell you what you did wrong last year, and they report the damage to the government. A tax advisor, on the other hand, is a strategist. They're part of your team, looking forward. You should be meeting with them in June and October, not just in April. You should be asking them questions like, what new incentives is the government offering this year? Should I buy that piece of equipment before or after December 31st? What is the best way to structure this new venture I'm thinking about to reduce my future tax bill? A good tax advisor pays for themselves many times over. So the ultimate takeaway from tax-free wealth isn't a secret loophole or a sketchy scheme, it's a fundamental paradigm shift. Stop seeing tax as a penalty to be feared and start seeing the tax code as a series of signposts directing you towards wealth. Your action item isn't to go out and buy an apartment building tomorrow. It's much simpler. The next time you think about your finances or the next time you talk to your accountant, change the question. Don't ask, how much do I owe? Ask, what can I do right now to align my financial activities with what the government is incentivizing? Ask, how can I start playing the game by the rules for business owners and investors instead of the rules for employees? Because true financial freedom isn't just about how much money you earn, it's about how much of that money you get to keep. And Tom Wheelwright's powerful message is that the government has literally written the rule book on how to keep more of it. It's sitting there, waiting for anyone who's willing to stop complaining about the game and finally learn how to play it.